Hi, everybody. Good day from around the world, wherever you may be tuning in. We're going to get started here in just a moment. Again, we're going to be covering the state of the industry of the blockchain landscape and looking at the first half of 2021. And more importantly, what just happened here in the beginning of Q3 and the end of Q2 2021 as well. So we'll give everyone just a few minutes to arrive this morning and get in. So we'll get started here in just a moment or two. Feel free to grab an extra cup of coffee or tea or water, whatever your drink of choice may be. All right, well, we're going to go ahead and get started, everybody. As people roll in, we'll welcome each and every one of them. And today we're going to, again, speak about the state of the industry, covering everything that's been happening in the blockchain industry. And more importantly, as I mentioned, what happened at the end of Q2 and the beginning of Q3 2021. We'll also be summarizing some of the major topics that have been up and coming here in the first half of 2021 and what to look forward to in the second half, as we have a lot of major core themes that have kind of taken this industry to another level, or in some cases different directions than when we started the year as well. And I will be your host today. My name is Kyle Ellicott. I am the co-founder here at Topio Networks and also our principal analyst for everything blockchain, decentralized, including decentralized applications, DeFi, and also non-fungible tokens as well, and much more. Very excited to share with you all of this insight that we have. A lot of the companies I'm going to be mentioning throughout today's presentation can be found in more detail as to what's happening with them on a daily basis, where and what they may be doing in terms of funding from an investor standpoint or partnering, releasing new products, et cetera, all on topionetworks.com as well. And a big, huge thank you to the entire team at Topio Networks and also to Raul and our designers who worked effortlessly up until about an hour ago to get together some of the finer details that we're going to be reviewing here in just a few minutes as well. With today's conversation, I am alone. I am your host, so please do bear with me. If you have any questions as they arrive, just drop them in the chat box or in the Q&A box at the bottom of your screen. I'll do my best to answer them in real time, but we'll get to them at the end no matter what. This webinar typically does run a few minutes over, so do save your questions to the end. Again, drop them in the box and I'll do my best to ask them all or answer them all at the end. And if we do run a few minutes over, I'll continue to stay later to make sure that they get answered as best I can as well. With that, let's go ahead and kick it off. So the blockchain landscape, as I mentioned, this industry has continued to evolve, and I continue to show this slide every time I present or speak about the blockchain industry. Here at Topio Networks, we began looking at this industry at the end of Q4 2018, where I started the initial taxonomy of just over 380 companies, looking to put together categories as to where some of the companies were or were not as this industry was beginning to take shape. That initial landscape started from 1,200 companies being reviewed to that initial foundation of about 380 companies. And over time, quarter by quarter, we would continue to look at every single thing that was happening and where new industries and new categories were emerging throughout the blockchain landscape. At the end of 2019, we did take a very big step in the industry as we saw an explosion of the blockchain landscape, over doubling in size, also the introduction of decentralized finance and decentralized applications, along with enterprise entering the industry in a pretty significant way. Going into 2020, in Q1, right in January and February, we saw this new era of what the blockchain industry and landscape would become as we talk today about what's happening now in 2021. And in later half of 2020, we saw the decentralized application landscape start to evolve as the beginnings of some of the blockchain and protocols that we're going to be speaking about started. We also saw the beginnings of the non-fungible token movement in a more aggressive way. And at the end of that year in 2020, we really saw the beginnings of a digital economy where we started to see these new marketplaces start to come up. We started to see decentralized finance in some test use cases, in some more significant use cases. We saw more asset purchases by large companies. We saw bigger brands and bigger names start to enter and participate in this space as a whole. And more importantly, and something very exciting for me, is the decentralized application or dApps landscape. Its infrastructure really started to come into its own. And I'm going to talk more about that here in a minute. And as we come into 2021, we again saw that initial landscape almost 4x in size to over 1,200 companies on a global scale that start to make up what the blockchain industry is today. And now, here we are in Q3 of 2021, which created a very unique time for the blockchain industry, which I'm titling the expansion. And this is where things have grown way above where they ever have been. And this industry is taking its own shape and its own voice and expanding in multiple different industries and verticals throughout many more than we ever expected as well. Before I get to introducing today's landscape properly, again, I do want to touch base on what's been happening in this year because a lot has. Now, some of these terms that I'm going to be mentioning, I'll do my best to define them. Again, if you have any questions, drop them in the Q&A box and I'll do my best to answer those at the end as well. Now, looking at how we got here, again, taking all the way back, we had the white paper for this peer-to-peer cashless, electronic cash system called Bitcoin, released by Satoshi Nakamoto in 2018. The first Genesis block that was mined on the Bitcoin network came just a few weeks later in the early beginning of January of 2009 as well. Fast forward, we get the general theory of decentralized applications, a framework that expands and explains what decentralized applications mean and what they could look like in this next era of the web, also known today in some cases as Web 3. We also had the very first non-fungible token or NFT created called Quantum as well. And then in 2015, we saw really the first public release and launch of the Ethereum network, which plays an important role in today's discussion. 2017, 2019, a lot of learnings, a lot of things that happened throughout that time period, including the ICO boom. We saw the need for more infrastructure. We saw a lot of gap areas and just a lot that this industry was pretty much still in its infancy. 2020 went down as a crazy year, as we've already summarized, and more importantly, this year and going forward into 2020. So 2021, we're just over a decade since this industry really began. And why that's important is where we've started and where we've come from is a very short amount of time with a significant amount of progress with this technology and how it has continued to evolve. We've also seen record-breaking venture capital ingestions throughout the industry and new funds that we're going to be speaking about. We've got infrastructure upgrades at the corest of core levels, from Bitcoin to Ethereum and others. We also have things like decentralized finance evolving and starting to merge into traditional finance, or TradeFi, as you might hear me say it today. We have decentralized applications in live environments and active. We have traditional applications looking to make themselves fully or partially decentralized in one way, shape, or form. And we have this new area of things called DAOs, decentralized autonomous organizations, that we're going to be speaking about as well, which is leading us into this future metaverse or metaverses of this digital life that we will be living more than we already do today online. So jumping right into some of the core themes of really, again, Q3, but a little bit of Q2 in 2021. So on the top, everything that we're going to be talking today about in these themes, all expansive, focus on ESG. It has been a part of almost every single conversation and debate throughout the last few months. And that stands for environmental, social, and governance. And more importantly, looks at the impact that this technology and industry that we're speaking about, blockchain, has on the world. And again, that filters into those 5 major themes that you see there, which has led us, or is leading us, into these metaverses and a digital economy furthermore. So starting from left to right, one of the biggest areas that we're seeing in terms of themes and disruption is payments. And payments has taken more shape in the last 45 days than it has in the past 2 years. And why I say that is we've got a massive battle between 2 of the biggest payment processors and payment companies out there, and also 2 of the biggest infrastructure companies in that space, and that's Visa and Mastercard. They are in an all-out battle to see who can do what with who the fastest. For instance, in the Australian market, both Visa and Mastercard have partnered with early and slightly late stage companies to implement debit cards that can be used for transacting and payments along with transfers of digital assets. Now, I'm going to pause for just a moment right here. So whatever I say going forward now, this is not investment advice. We are going to be talking about digital assets, not just as a whole, but some of those that are specific, along with specific venture capital deals and venture capital markets. So please do your own research. None of this is investment advice. Continuing on, Visa and MasterCard also both have fast track programs, bringing early stage, and in some cases with MasterCard, late stage companies into their ecosystem, plugging them into their infrastructure and giving them access to their entire merchants and customer bases, and vice versa, focused all around digital asset transactions. Next, we have PayPal, who first, at the end of last year, or beginning of last year, 2020, end of 2020, opened up the ability to buy cryptocurrency and digital assets. Slowly started in the US, expanded globally into Europe, went from a few thousand to 10,000 to all of a sudden this year opening up $100,000 limits for purchasing those digital assets. And furthermore, decided to do that and open it up into Venmo, their mobile peer-to-peer payment application. And then said that wasn't enough and is now going to be releasing a new crypto super app and wallet to, again, focus on this world of digital assets. A lot of this in terms of digital assets is focused around stable coins. So some like USDC or USDT as in Tether, also preparing for those central bank digital currencies, those CBDCs. And also in some cases, the more notables like your Bitcoin or Ethereum as well. We also have Square. Square has probably made some of the loudest noise in this industry, as in a matter of about 45 days, Square has not only released massive revenue numbers from their Cash App with digital asset purchases, they've also acquired Afterpay, the buy now, pay later firm, to integrate into Cash App. They are also building a new development platform and ecosystem for developers building on decentralized platforms and Bitcoin. They also are talking in partnership with Twitter and Blue Sky and Cash App and how that ecosystem could all work. They're also releasing a hardware wallet for Bitcoin. If you can't see, Square is doing everything they can to focus on this industry, and Bitcoin is at its core around all of their efforts right now. Coinbase, we saw a Coinbase card get added to Apple Pay and Google Pay, which now means, again, you can buy, sell, and transact through those digital assets you purchase on Coinbase into your Apple and Google wallets. Paxos releases a Bitcoin payment tool for businesses, something that's very much needed and a huge gap or opportunity area for those looking to build in this industry. And we have NYDIG, that is partnering with a massive amount of companies to provide buy, sell, and custody services for Bitcoin and other digital assets to multiple customers and US bank accounts. In Q2, they partnered with a company known as Q2, to give 18.3 million US banks the ability to buy, sell in Bitcoin. And NCR Corporation partnered with them and provided this access to 650 banks, along with 24 million customers and credit unions as well. We've got more focus around the infrastructure of payments and the faster settlement, along with real-time data access as well. And one more thing I want to mention in that is the Monetary Authority of Singapore, MAS. They have done a number of efforts in this space, including with Tessemac and further into the Singaporean government, along with JP Morgan and their Onyx division, which is focused on blockchain. And right now they've got over 300 applications for crypto payment and exchange companies to be a part of, not just based in Singapore, but also a part of Singapore's digital currency or Project Umin product as well. Now, that all moves us into mining. Mining, which next to regulation is probably the second biggest topic of conversation right now. Take a step back a couple weeks. China, once again, banned crypto and crypto mining. However, they took extra steps this time and actually went in to, I believe, 24 different provinces and pushed out or shut down miners within those regions, which sent miners panicking and went everywhere around the world. We have some that ended up in Europe. We have some that moved to Latin America, and even more importantly, the United States. The United States actually saw a huge gain from this ban of cryptocurrency mining in China as more miners decided to relocate here. Now, what does that mean? Well, environmental impact came up as the topic of conversation. How mining would be done. What is the environmental impact and the energy usage of mining? Turns out many of the mining companies out there are actually using alternative energy or excess energy as well. Now, I'm not going to go full into that. I'm happy to answer questions later, but there's a number of resources I can point you to if you're interested to learn more. Compass Mining. Now, Compass Mining is a very unique company, and they just signed a 20-year deal with Okla, who is focused on nuclear fission energy production. And they will be doing Bitcoin and cryptocurrency mining beginning in 2023 on a nuclear level. They're not the first to partner or work with nuclear power plants and use nuclear as mining. So is Talon Energy. Energy Harbor and Standard Power are actually working together to do Bitcoin mining in the state of Ohio, also working in the state of Pennsylvania as well. So you're seeing a few states pop up here in the United States, including that of Kentucky, who now has laws enacted for tax exemption if miners come to relocate and operate in the region. Texas has done something similar. And again, we're seeing this landscape take shape here in the United States. Last company I want to call out there is Stronghold Mining. Stronghold Mining, why this company is important. And again, matter of 45 days, they went from raising 100 million to then raising another 74 million to announcing an IPO to acquiring a second power plant with a third in process, all focused around, again, cryptocurrency mining. So something very big and taking shape, which leads us into digital assets and why this area is starting to take shape. Cash App, as I mentioned, saw Bitcoin revenues for quarter 2 up $2.7 billion, a huge amount gained over year growth. We've got crypto ATMs that have now expanded globally to almost 24, I think it's almost 24,500 around the world in many of the countries. So Latin America to the United States to Europe as well. Stablecoin market caps have surpassed $100 billion and are pushing close to that 250 and higher market cap as well. USDC. So USD coin or USDC has come into the conversation to focus around its expansion to 10 new blockchains. Some of those include Solana to Ava to many of the more known blockchain out there to begin working and being able to develop or transact across those blockchain networks. Texas Department of Banking, along with many others, have continued to give the green lights for banks to be custodians of crypto assets. We saw a lot of this in our last discussion around Q1, that the custody part of the landscape had taken off aggressively. Well, now the states and state governments are starting to get involved and empower banks and institutions to be a part of this. And speaking of institutions, if you're not paying attention to the headlines, I'm going to give you a few of them. But I can tell you right now, institutions are entering this space, and specifically digital assets, along with mining, along with payments and exchanges, more aggressively than many think. You've got Bank of America, Wealthfront, State Street, JP Morgan, and all those names listed right there, and many more who are all looking or participating in this. They're either opening up new services to provide high net worth clients, they're providing crypto funds or indexes to all clients. They are providing the buy-sell services along with IRAs or IRAs and additional retirement services to their clients. They're co-creating and launching exchanges for buy-sell of digital assets to compete against the exchanges that we know or will be speaking about here in just a few minutes as well. BNY Mellon is one of those that's leading that front. Also, BBVA will begin Bitcoin trading and custodian services here this summer. Goldman is working with a number of partners. Standard Chartered is opening up a brokerage for their clients starting this fall as well. Fidelity just beefed up their digital asset division, adding 100 new positions. Again, institutions are here and they're getting more aggressive by the day. Back on the ATM, one point I do want to bring up. So while we've seen this global growth, Bitcoin Depot added Bitcoin ATMs at Circle K locations throughout the US and Canada, adding to that 24,000 ATMs that are out there in the world. And again, a lot of this is playing into that central bank, into those digital currency, or excuse me, country-based digital currency conversation. And last thing, JP Morgan. JP Morgan continues to be a notable voice in this industry, has come out to say that they see the staking industry as a $40+ billion industry by 2025. In part due to Ethereum's upcoming launch and a few other networks as well. But hold on to that note for just a moment. We're going to come back to that. Central bank digital currencies. Well, it's continued to stay a topic. It's continued to be atop of all of our minds. What's happening, what's not happening, what is going to be, what is not going to be, etc. Well, the digital yuan in China has taken off. It's also known as the ECNY. And not only has it been piloted time and time again with many corporations and brands such as Starbucks and many others locally within the regions. Citizens have had the chance to try it in local applications. We've seen single to tens of millions of dollars tested on transaction level. Just recently, this week, they integrated it into the digital yuan was integrated into the Beijing railway system, into over 400 different trains, and I believe over 24 different lines that touch over 10 million daily riders who will now be able to use the digital yuan to provide transportation, to do top-ups, to buy, sell, and again, transact through transportation efforts throughout the city. And more importantly, they can also use and receive that same digital yuan in 3,000 plus ATMs throughout the city. And this is all within Beijing alone. We expect that to expand throughout the country here by the end of the year and into 2022. El Salvador, coming back to what we talked about in the beginning of the year in Q1, El Salvador sets Bitcoin as a currency within the country. They then airdrop $30 worth of Bitcoin to all of its citizens. And as they decide to do this, the World Bank pushes back and says, no, we cannot support you. We cannot help from a technical or a monetary perspective. You need to figure this out on your own, but we do not recommend it. Well, the country then decides to go to the second theme there and start mining and start looking at how they can help on mining to reduce environmental impact and take on this effort alone. We saw them also influence Paraguay, who, along with Panama, that we're talking about doing something similar here this summer, but haven't heard much since announcements earlier in June on that. The Central Bank of Nigeria will be piloting their central bank digital currency in the fall. We also will see Ukraine along with the Bank of Ghana, and also potentially the digital ruby out of India, as the country continues to go back and forth on whether or not this will happen. Looks like it actually may as well. And then lastly, all of this, while wild and exciting, leads into the big red topic there on your screen, and that's regulation. I mentioned we're just over a decade into this industry. This industry is seeing billions of dollars, and in some cases, trillions of dollars of transactions globally being handled. And there's not much talk of regulation. Regulation has been teased and has come and gone, but it is now here. It is now a top priority for many countries around the world, and not just because of central bank digital currencies, not just because of those assets, but all of the themes that we've talked about and so much more as well. There's current conversations going on right now in the United States with the SEC and the current infrastructure bill that's being placed forward on how or if the industry will be taxed and potentially regulated. That includes things like exchanges, to decentralized exchanges or DEX, to potential applications and tokenization of those, and much more. Now, that sounds very scary and a lot. Let's take that back for a second. Again, we're just over a decade in the industry. A lot has happened. We're seeing billions and trillions of dollars transacted. There are very few, if any, guidelines as to where this industry can go. There is some good regulation, and then there's very unknown regulation. So I do expect that we're going to see some regulation at the end of the year come through, in the beginning of next year even more. And a lot of it, I hope and think that it will actually be good to provide lanes for development and for the industry as a whole, and to help it grow exponentially and not necessarily cease to exist, as some have discussed and some proposals have put in light that could happen in the United States. This is also coming up because of the ETF conversation. Right now, globally, we are seeing Bitcoin and other cryptocurrency ETFs publicly traded. In the United States, we still have yet to have one. There are a number of companies, those institutions I mentioned previously, that have joined together that are pushing for this to happen. There are talks that it could happen by the end of the year with experts. Not sure if that's going to happen. I would bet on 2022 for sure, but 2021 still TBD. We also have stable coins. The hood has been pulled up, if you will, looking at what is happening behind these stable coins. What are they actually backed by? What is the collateral? So USDC, for instance, Circle did release the makeup of what does back up USDC, some of it cash, some of it current security, some of it bonds, and then USDT or Tether is currently the biggest in terms of market cap, 64 billion, and they have yet to release what those details are, and we should see them. HSBC, one of the largest banks in the world, has gone live on the UAE's new KYC, or Know Your Customer blockchain platform that helps exchange data between financial institutions for KYC purposes as well, and is actually powered by the FIDES blockchain as well. And HSBC is actually the fourth major financial institution to join, an overseas institution at that, to join that platform, and I expect more to do that. So KYC doesn't have to happen every time you join a bank or you join a new account. Instead, it's kind of a connect-all identity, if you will. Taiwan has set in new AML, or anti-money laundering laws for those exchanges that are based within the region. And more so, why this conversation is important, we also have BlockFi, a company that does a lot of different things, a major company in the space, but recently has received stop orders from 5 states and growing, because those states are looking at the company and their interest savings accounts, or their interest accounts, pardon me, as potential securities, where someone stores or has their digital assets in a BlockFi account, for instance. Interest is gained at a high digit yield in annual APOI. It's generating some people a lot of money, and states are not too happy with that. Again, that goes back to regulation. and putting those guidelines in place so that companies in the future know how and what to build into. So that's just a little bit of what's happening just in the past 45 days in this industry and some of the themes that are reshaping how these quarters have looked this year. So I want to introduce you to the blockchain landscape. We are now at over 1,400 companies throughout this landscape. From the last version in Q1, that was around 1,200 companies. We've seen funding almost double in this landscape, with a third or about 20% of it actually generated year to date. And I'll go into that much more here in just a minute. But what's also happened, so going back to those 5 themes that we spoke about, and then also environment along with metaverse, this industry has now exploded or expanded beyond its means and beyond the confines of the singular landscape that we once started back in 2018. As we took and continued to invest and research into this industry, we dove deeper into decentralized applications, knowing that that infrastructure would power the next wave of applications. Well, it turns out, as you can see with the gold boxes, that many landscapes now exist. The blockchains, the protocols themselves are full of budding and exploding or expanding landscapes of new companies and new infrastructure areas. Layer 2, scaling solutions, is a landscape of its own. Decentralized finance, virtual worlds in the metaverse, to exchanges and decentralized exchanges, to DAOs, and much more. We're going to be expanding on these over the coming year, but just wanted to give you a sense as to how this industry went from very small and early innings, if you will, in 2018 to where we are in 2021 to where we're going, and even further expansion. You're going to see that box in yellow, that's non-fungible tokens, where we do have a new landscape in development right now, that industry is taking further shape than it ever has before in the past few weeks. So looking back at this industry, and more importantly, the first half in terms of summary, we've seen over 15 billion year to date raised in the first half of 2021. $15 billion just in the first half of 2021, over 270 deals that have been tracked during that time. And as you can see on the chart on the left there, we have July, where we saw a significant amount of deals, saw over 75 deals in the month of July, with over $4.7 billion transacted. The second highest month was May, with just under $2 billion and 45 deals transacted. In Q1, we saw 5 billion. Q2, we saw 5 billion as well in August. We are today, August 5th. As of right now, and about 45 minutes ago, we have seen over $400 million in transactions come across this landscape in the first 5 days of this month. That's 14 different deals, not including 3 acquisitions that have happened in the first 5 days of this month right now. I am expecting August to be potentially the biggest, leading into the biggest quarter we've ever had, which will be Q4. August to be the biggest month, Q4 to be the biggest quarter we've ever seen in terms of funding thus far throughout the blockchain landscape. And to give you context, when we talked about this in Q1, the landscape had seen about $22, $23 billion transacted. Right now, we're pushing almost 50 billion. And 15 of that year to date is here in 2021. In terms of deal sizes, so in 2021, we saw more deals over 100 million than we ever had before. Over 30 of the deals transacted were greater than or equal to $100 million, implementing many unicorns in this space. Big rounds include FTX. FTX, an exchange that has a ton we're going to be speaking about today, saw $900 million fundraising in July. So rare. The fantasy football or soccer game focused around NFTs saw over $500 million in just one funding round in July, not including previous funding earlier this year at 50 million. Fireblocks, 300. Mercado Bitcoin, An exchange focused on Latin America entering into the South American market and leading in Brazil, 200 million. OpenSea, the leading NFT marketplace right now, seeing over $100 million fundraised in July alone, and also opening up to cross-chain support and supporting more blockchains than just Ethereum and a few others as well. So what does that mean in terms of venture capital? I love this part of the industry, as many of you know. Here's where things are today. In July alone, we saw almost $860 billion of new funds created. So if you're building anything, this is the time to start fundraising, and these are some of the individuals to start speaking to as well. There's almost $1 billion new dollars in just the month of July alone that was created for investing in this area. You see Pillar VC, who created 2 funds. Acrylic, that was created by one of the partners at Accomplish, Ash Egan, created his own fund, $55 million. Ecosystem funds from Terra, $150 million, to Solana, to Polygon, multiple times over, to many others. Borderless Capital, Near Protocol, as you see with Move, are being created. Ecosystems are reinvesting in themselves and their ecosystem projects and bringing venture capital with them to the table. Solana, along with Audius, a platform that's built on the blockchain, along with Megaplex, created a creators fund, $5 million to support creators that are focused on the music, entertainment, or NFT industry as well. We also have fund-to-funds. Galaxy Digital has now created 2 different fund-to-funds to invest in other funds, along with early stage or emerging fund managers. Fabric Ventures raised $130 million, of which I believe 30 million actually came from the European Union. So pension funds and country-based funds are actually coming into investing in this area. SCB10X, coming out of Thailand, saw a $50 million fund earlier this year, now has a war chest of $110 million to invest in decentralized finance and dApps. They see as a bank globally that DeFi, decentralized finance, is the future, and they need to be investing in it. The country of Colombia has set aside $2.8 billion to invest in blockchain companies in the next few years. Country of Australia, Australian government is looking to fund startups via its blockchain pilot program and has already begun to do so as well. We're seeing more creator funds created to fund creators around non-fungible tokens and otherwise that may play a role into dApps and other parts of the ecosystem. And last but not least, Andreessen. Andreessen Horowitz Crypto Fund 3, originally rumored to be 1 billion, then 2 billion, then 3 billion, came out to be $2.2 billion as well. And oh, one other note, PayPal, Visa, along with other big institutions, joined Blockchain Capital's recent fund that they just announced there in June for 300 million as limited partners. So you're seeing more and more companies double and triple down. Also, Polygon. Polygon came out and created Polygon Studios, a new gaming studio we're going to speak about, and decided to launch days after $100 million fund for those companies building in gaming, NFTs, creators, all on the Polygon network. So a few more funds that have been launched. Again, we're continuing to see this activity. May, we saw over 17 funds, June, over 10 plus, and July, 10 plus as well, creating capital. In terms of investment, I'm not going to go through this too much in detail, but we're seeing deals everywhere. We're seeing right now, in 2021 alone, we saw over 20 plus acquisitions in the space, 3 plus IPOs, including Robinhood just this week, along with Coinbase as well. We've got 3 and growing IPOs or SPAC mergers that are prepared to come in the second half of this year, and many more growing as well, including Circle to some of the mining companies that are out there as well. So as you're seeing, this is just Q3 and Q2 funding as we get through it. Now, jumping into the landscape quickly, we've got over 1,000 companies, a 13% gain in the entire landscape itself. And again, 15 billion invested year to date, 48 thus far as well. Starting off in infrastructure, 500 companies, a few categories to pay attention to: protocols, mining, custody. Starting left to right as we break this part of the landscape down, areas of focus: interoperability, sidechains, and protocols. Protocols have gotten much more focused and much upgraded since we last spoke about them. Protocols are very specific now. We're seeing protocols focused in decentralized finance, focused on insurance, focused on gaming, focused on NFTs. We're seeing this new level of layer ones rise to be very specific to the use cases that they need to support as well. We did see some major upgrades as well. Taproot upgrade happened recently on the Bitcoin network was approved and will happen in November this year. That's a major upgrade for the Bitcoin network. We also saw today Ethereum's London upgrade implemented that includes EIP 1559, which introduces a minimum base fee on every Ethereum transaction, helping to lower some of those gas fees to improve Ethereum development as we head into the Ethereum 2.0 release as well. Ava or Avalanche has added the Oracle Chainlink, which we're going to speak a lot about in a moment, to their network and into their dApps ecosystem. We're seeing decentralized finance launched on Cosmos, thanks to the Gravity DEX as well. So if you're looking at maybe where you should start building applications or learning a little bit more, some of these I've highlighted. Polygon continues to grow their ecosystem, as we spoke about. Cosmos and Polkadot are huge in terms of interoperability and growing ecosystems. Polkadot launched their Parachain offering last month, in June, where they actually are auctioning off 30 different slots for companies, protocols, and developers to purchase, rent, and then build on top of throughout the Polkadot network to grow and scale that interoperable network as well. You've got a few to pay attention to. Near Protocol with that fund that they just launched as well. Goro, Quora as well, Kasuma, Stacks, Cosmos, Polygon. These are all good protocols and networks to be paying attention to as well. Jumping into the scaling and dApps ecosystem of this part of the landscape. Now we do have, again, that dApps section exploded more and going more in depth on these areas and much more. But I do want to call attention to a few minor things. So Chainlink, oracles. Chainlink today announced with two major companies that will be running nodes on their networks, and why this is important I'll get to. Swisscom and AccuWeather both have said they'll be running nodes, Chainlink nodes, and supporting the network along with providing data. Swisscom, in particular their digital asset division, will help to provide a continuous feed of digital asset price data, helping to better settle financial contract. More importantly, AccuWeather running this node and then bringing their entire weather API network into smart contracts in partnership with Chainlink allows for weather information such as temperature, precipitation, wind speed, natural disaster classifications to be a part of smart contracts, allowing for use cases such as smart contracts that are powering non-fungible tokens that can change depending on weather forecasts. Think about events, to weather predicted markets in terms of natural disasters, against natural disasters, or automatic supply chain shifts based on real verified weather data. I'm a little excited about this because this is something we have all hoped would and been waiting for come to the blockchain ecosystem, and it is finally beginning to be here and take shape as well. Zabo, a data aggregator and also a tool for connecting crypto exchanges, wallets, etc., was acquired today by Coinbase. Two companies to pay attention to: the Akash Network and Filebase in the storage category, who are working together to provide a multi-cloud decentralized web storage infrastructure for what they're calling the D-Web, or decentralized storage. Neon Labs, Ethereum Virtual Machine, or EVM, is helping to bridge Ethereum and Solana as well, a new frontier for decentralized applications. As well, Cardano, their Alonzo Bloom node 2.0 has reached testnet, is moving towards mainnet as well. We also have runtime verification on the security front and a lot more efforts around auditing of smart contracts. And then Magic. Magic came out and raised, I believe, $27 million to focus on passwordless authentication. An area, again, we're starting to see more focus around that being authentication and digital identity. In some cases, people see digital identity as one of the most important areas of the landscape as a whole. So tokens and data, that next portion of this section, I'm going to cover this very quickly. Categories to watch, all of them. More importantly, mining. We spoke about this earlier, but tokens. Tokens, not just because of regulation and stable coins, but new forms of tokens. We're talking about social to personal to community to governance tokens and how those will start to take shape now and in the second half of this year. Custody will continue to be important. Because institutions will take over, but there's still need for custody solutions from an early stage startup perspective, whether that's with exchanges to hardware or software wallets and individuals as well. A few companies to pay attention to. Bullish. Bullish is a company that launched out of the EOS ecosystem. They raised $400 million, yes, 400, following by another 75 million, are planning a SPAC and are a new exchange that just began a 7-week pilot program as well. Peter Thiel has backed this along with another of other big names, something to watch. FTX, $900 million war chest, partnerships by the day, and also have are working with Copper and a number of other trading products along with custody solutions to provide that back to institutions and new applications as well. One other things I want to mention, telecom industry. Deutsche Telekom has partnered with Andreessen Horowitz, A16Z, to help secure the Cello payments network and working through this with T-Mobile and T-Systems text messaging system as well. So Deutsche Telekom works with Cello networks, helping to stake and support as an active participant in that network, bringing the hopes that stablecoin along with the network can be utilized for telecommunications, including text messaging and that of T-Mobile services as well. All right, enterprise, 260 plus companies, lots of activity, shockingly at the last few weeks in this category. Other than that, it's been pretty quiet, but categories to watch: retail, energy, DAOs, HR management. We're starting to see this shape of HR and back office, from accounting to human resource management to finance. Companies are starting to enter in this space so that on-chain data exists. A company like Gilded, for instance, is doing a lot of work in that. Also insurance, whether that be insurance to digital assets on protocols or exchanges or in applications as well, and wallets. And we'll be talking about insurance in other cases in just a moment. DAOs, decentralized autonomous organizations. While it seems small in this landscape right now, that category will explode in this next update. And currently, there's about 30 plus different companies that are already being in review for that. One that I want to pay attention to is DAO Stack, a company to pay attention to. Lolly in the loyalty and retail division that just raised $10 million, helping to provide rewards for those that are users, and also discounts and rewards back in Bitcoin for your purchases as well. On the retail side, Power Ledger moved to Solana from Ethereum. Big move for the energy sector, moving to Solana for speed reasons. Also, this morning, New York City and their Department of Finance, or DOF, has chosen a few partners to begin looking at how the city can use blockchain as a means of preventing deed fraud in land records. So we're seeing this new movement in real estate, not just the idea of purchasing an NFT to show ownership of your property or fractionized real estate, but real actual deed ownership as well. Consumer, 380 plus companies, the explosion of explosions throughout this blockchain landscape as well. In terms of breaking this down, we're going to start left to right. TradeFi, or traditional finance, to decentralized finance. We are seeing a huge amount of efforts, as I spoke about, Visa versus Square, leaving Discover, Amex, and many others in the payment networks behind in their dust as the two battle it out to who, if either or, will be the leader in this space. We talked about Square, but going into lending, we're seeing lending not just on digital assets, but on non-fungible tokens. And soon we're going to start to see credit scores enter into this industry, where decentralized finance will welcome into this new DeFi credit scoring system, where we're going to be able to leverage, and this goes into those that may be unbanked or may not have traditional financial products and credits systems as other countries or regions do, but we'll actually be able to use digital finance as a means to generating a credit score or a credit rating. So those digital assets, those non-fungible tokens that you may purchase and have, can be used in the future for an actual credit score or credit risk rating systems as well. And there's a number of companies that are currently working on that at the moment. Aave is introducing DeFi institutional products called ARC, which should be here any day now. Berkshire Hathaway finally entered into this space, putting $500 million into Nubank, a neobank in the space as well. Digital life, part of the metaverse, as we spoke about earlier, continuing to see shape. Gaming, non-fungible tokens, virtual worlds, content, media, social networks, marketplaces, every aspect of this section in the consumer landscape is something to pay attention to if you're not already. Lazy.com has completed their integration with Polygon to help expand their network of NFTs. That's Mark Cuban's digital showcase of NFTs. We're seeing a lot of activity in social networks. We got Spencer Dinwiddie's latest project coming out of the Hedera hashgraph ecosystem called Galaxy, helping individuals create social tokens and engagements throughout its platform and into others as well. We've got BitClout allowing for tokenization of individuals as well. And we're seeing a number of other efforts in this space aggressively. That from Roll to Rally, using infrastructure to create tokenized communities, along with Seed Club and many others who've just recently raised funding in that space. Friends with Benefits and others as well. Marketplaces. Marketplaces, when we started this landscape, were just a few. It's now commonplace. We're seeing more marketplaces getting created, whether that be someone like 4K, who's creating a marketplace for the entertainment industry and content, film, audio, and others, to Spotify entering this space and allowing merchants to do NFT sales directly, to DraftKings announcing their new NFT marketplace as well. Rad, who signed a partnership with Cinedigm to bring non-fungible tokens into the entertainment industry. That includes films, audio, music, television shows, brands, IP, all onto non-fungible tokens onto a blockchain. The future of ownership, the future of rental, the future of content is starting to take shape in a decentralized world. How and what that looks like, we're going to talk about in a moment, but that's just a few of those things as well. Autograph, which was co-founded by Tom Brady, quarterback of the Tampa Bay Buccaneers, signed a partnership with DraftKings after they announced their NFT marketplace, and FTX to sell their NFTs with leading athletes, including Tiger Woods and many others, and announced a partnership with Lionsgate to do the same thing around entertainment as well. Binance has a new NFT marketplace. McLaren launches a new NFT platform with Tezos. As you can see, this is a growing trend that's going to do nothing but get more aggressive. On the virtual world side, you're seeing virtual worlds take shape, where ownership of virtual land is a part of an acquisition strategy for many companies. We're seeing virtual land plots go for hundreds of thousands to millions of dollars. Sandhill Road, led by Redbeard Ventures and a few others, is being duplicated in the Sandbox, for instance, which is co-developed and owned by Anima Koa Brands as well. And we'll talk about Axie Infinity in the gaming space here in just a moment, but continuing through the blockchain ecosystem, I'm not going to go too much in detail here, but on the ecosystem, we've got hundreds of new venture funds, hedge funds, and also asset managers, along with those fund of funds that are in this space for each and every one to take advantage of and begin to have conversations with. Animoca Brands and Brink, by the way, did create an NFT accelerator called Launchpad Luna. Mastercard, as I mentioned, created a Start Path, a new accelerator for fintech startups at the later stage to begin working with. What's happened in the last few weeks? Here's a short list. A lot more to talk about and a lot more to come as well. I've already spoken about some of these tops of themes, but FTX, I want to come back to, has announced that they will be a 10-year sponsor of League of Legends, which is an esports, or excuse me, is a game with an esports league attached to that, and will be supporting broadcasts along with broadcasting, not just content, but also the ownership of digital gold rewards from the league. That comes just after FTX announced a sports-specific NFT marketplace, including that of esports, and inked a deal with Major League Baseball after they announced their first non-fungible token launch as well. And also sponsored an esports team, TSM, and rebranded to TSM FTX as well. So what you see here is FTX is playing their hand in many areas of the sports and entertainment world outside of just that of finance as well. Amazon, real quick, Amazon is expanding or looking to expand their team. We heard in 2020 that they were looking to do a digital currency project in Latin America, specifically Mexico. Fast forward, they wanted to start hiring team members that with blockchain and digital currency or DeFi experience. Then there was rumors that they may be or may not be accepting digital assets as a means of payment. That was then denied, or excuse me, declined by the company, that it would not be happening, but I would still keep your eye on that for the second half of this year as well. And then Coinbase also not only went IPO this year, but also announced a third-party dApps and crypto app store similar to that of the Apple and Google Play stores for those that are building dApps, decentralized applications that connect into and with a Coinbase wallet, but are not having to be proprietary to the Coinbase ecosystem as well. A little bit of what happened here in Q2. We've already covered some of this as well, so I'm going to skip over this, but DAOs, decentralized autonomous organizations, what are they and why are they important? Decentralized autonomous organizations, or DAOs, are entities with no central leadership. Decisions get made from the bottom up. They're governed by a community, internet native, digitally native as well. Pause for a moment. That's a lot to take in. This is a very important area of the landscape and something to be paying attention to. Right now, excuse me, we're seeing over $7 billion worth of digital assets held in the top 20 DAOs as of yesterday. That is a significant number of what's being held in total TVL, or total value locked, throughout the DeFi landscape, which is about $70 billion. So 10% of that is just in DAOs alone. There's over 1,200 decentralized autonomous organizations out there, according to Snapshot, that have governance over protocols and applications. And you can go to Snapshot or a few other websites I have tagged down here, Deeper DAO and others, to participate, to view these proposals, to see these proposals and how things will develop. You're seeing foundations like the Graph Foundation that is putting protocols out, or proposals out into the world on how their protocol and otherwise will be governed as well. These are just a few names: Uniswap and Sushi. Sushi, I want to bring up. There's a big debate going on right now around DAOs, DEX, or decentralized exchanges, governance, and venture capital. Who has what say? If venture capital invests in your company, but you're a decentralized company with a decentralized governance structure, who actually has control and say and ownership of your organization? That's a big conversation of topic right now. The first DAO to DAO loan was handled by Cream Finance and Pleaser DAO for $3.5 million, a loan that was backed buy, please are DAOs, foundations, NFTs that were worth about 3 times that at the time of a loan. First time we've seen that. So 2 organizations that are internet native, digitally never met in person, if you will, have provided a loan to one of the other and collateralized that loan as well. Decentralized exchange Shapeshift moved further into a DAO and will be turning over all operations to the governance community and the community holders of their FOX token as well. State of Wyoming now legally recognizes DAOs as entities, and companies can register within the state as a digitally native organization. Also, it's disrupting venture capital. We've got a number of groups that have come together, people that have never met before, joining together, communicating as a community what they may invest in, what areas they should not invest in, and pooling their capital together. I've mentioned a few over here. Metacartel Ventures is one of the most notable, with over $12 million under management, 110 members, and growing in a number of great investments in the space. Delphi Infinity focused on NFTs and infrastructure as well. Syndicate Protocol is actually helping to provide infrastructure and for these on-chain funds that have been created. Metaverse and the digital economy, NFTs, high level, we've seen over $2.5 billion in growing in sales. That does not include NBA Top Shot, along with some of the protocols. So expect that number to be over $3.5 billion currently year to date for that here in 2021. Again, 2022 was only 250 million, something to remember. Shopify, as I said, opens up NFT sales for all merchants. Alipay allows for users to buy non-fungible tokens within its application. Axie Infinity, a game that has non-fungible tokens in it, saw $45 million in August, again, for 5 days in revenue with over 1 million active users. They saw almost $200 million in revenue in July 2021, all focused around their platform. It is very notable around this play to earn model where individuals are actually earning an income, a living off of playing the game, where they are then able to receive a portion, as you see, 95% of the revenue generated within the game. The NBA's Sacramento Kings and the Knicks have started to enter the world of smart ticket experiences for fans, where fans not only get a digital collectible for purchasing the ticket, but something as in terms of experience, whether it's exclusive merchandise, experience of after the game or pre-game experiences as well. That's being tested right now in the NBA Summer League, and is something I'm expecting to see here start to enter more aggressively as seasons start just in a few months with the NFL, the NBA, and many others as well. Art Blocks, a huge new area in the new application in the NFT space, generating over $100 million in volume as of August 4th. Something we're seeing more of, so pay attention. Coca-Cola enters the NFT sector with a live drop in Decentraland, a virtual event. We're seeing more virtual events in these virtual worlds as well. Stay tuned. Coca-Cola is not the first. We also have CNN that has released NFTs. We have Burberry, Dolce & Gabbana, many brands, and also NASCAR today announcing a partnership with Zedrun as well. So a lot of big brands entering in this space in any way they can find an entrance. And one thing to mention in terms of the metaverse, its definition, there's many definitions as to what the metaverse is or will be, or metaverses as well. Matthew Ball, I wanted to call attention to, does a great primer, a 9-part series on the metaverse. These are some of the areas he looks at that combine into what the metaverse is, in his opinion. Definitely something to check out. So we have now hit that turning, we've hit that expansion. Protocols are out there partnering and building their ecosystems. Venture capital is moving more deeply into those categories that we spoke about, not just decentralized applications, but very specific consumer applications. We're seeing more fundraising events, not just at the equity, but again, at the ICO, the initial coin offering, or token sales as well. Security is still an issue. We're seeing new exchanges, we're seeing bridges, new consensus mechanisms as well, including proof of transfer out of the Stacks ecosystem, proof of attendance, proof of agreement, and others. Bridges between blockchains are still not there, but are coming. And we're starting to see more activity around cloud migrating to a decentralized world. Opportunity areas, they're staying the same, but more importantly, they're more important than ever. Tokenization of everything from intellectual property to individuals to physical assets, etc. That is a huge area. However, more importantly, the data behind it. Every time an NFT or a non-fungible token is created and transferred, there is data that is attached to that. What can we do with that data? What type of open graphs, similar to that of what the graph is doing, can we be building of that data as well? Bridges between protocols, but also applications. As dApps come into their own in the Web3 area, what can be built? And also the blueprint. If I'm building a company right now, looking at the second half of 2021, more importantly, I'm looking at building a company next year, these are the questions I'm asking myself. If I'm a major brand, if I'm a corporate, if I'm a board member, these are the questions I'm asking. If I want to stay competitive, if I don't, you can ignore this slide. If you do, pay attention. What's your non-fungible token strategy? What marketplaces are you going to use? You're going to build your own, or are you going to partner? Doesn't matter if you're writing blogs, you're creating movies, you're creating art, you're having experiences, you have events, it does not matter. If you do not have a strategy or considering a strategy for non-fungible tokens, again, tokenization of physical to digital, going into 2022, you're going to be fairly behind. And I hope the best for you. With that, what is the value and the digital experiences you can provide to your customers? As I mentioned, the Sacramento Kings providing that digital experience at the event along with a digital take home. Coca-Cola being in a live virtual event. How will you position yourself in a virtual world? Do you need to? Maybe not. Maybe you do. What's your identity? Multiple identities for many multiverses for your brand. And you may look at how you want to grow your identity as a brand throughout as well. Is blockchain and decentralization necessary for your tech stack or your application? And if so, when and how will you decentralize? Fully or partially? What is the transaction and custody strategy around digital assets for your application, for your company, for the products and services that you sell? And what's your content strategy? We look at, again, the idea of this Web3 content phase that we're moving into. Everything's on chain. Everything you write is permanent and stored and will be there. It can also be fractionalized, it can be sold, it can be shared, it can be monetized in ways you've never thought, imagined, and we're still learning about today. And with that, everybody, that's the quick rundown of what's happening in the blockchain landscape as we know it. I know that was a lot. I covered a ton. I will pause here for questions, but as I mentioned in the beginning, this industry is taking a new shape. It is expanding beyond its means, beyond its bounds, and will continue to do nothing but get more aggressive and expand further globally. We're seeing those themes of payments, mining, digital assets, central bank digital currencies, and regulation play true and will play true through the rest of the year. Environmental impact and concerns will continue to be a top of mind. The metaverse and how we transition into a full digital economy or digital lives will be important, not only to us as consumers, but to your organizations as well. So with that, I'm gonna pause for a moment. I know there's a ton of questions as well, so I'll stop sharing my screen here for a minute and I will jump in. And thank you everybody as well. Good morning. Good morning. Let's see. All right. Why is Bitcoin mining so energy intensive? I am not the expert to fully answer this. However, if you look back at the consensus mechanisms such as proof of work, for instance, these types of things require a lot of computing power. If you ever look at inside a mine, for instance, you've got a number of processors and power supplies that are running intensely 24/7, 365 as well. And so with data centers that we have already for cloud computing, you're entering the space of new data centers and not just data centers, but again, mining, the area of processing power that's required as well. So I hope that answers it. There's great resources out there from, again, Compass Mining, the Great American Mining Company as well, and many others I can point you to. So feel free to reach out to me on LinkedIn, and I'll happily point you in those directions and details as well. Let's see. All right, more questions. All right. What do I think of the IMF's warning to El Salvador? Does the IMF have capacity to prohibit the use of cryptocurrencies in an official country? Good question. That is TBD, to be determined. And part of that is they can recommend and step back from support, which could be hurtful. They could take away certain, again, support that they may already provide to the country, but they cannot necessarily say yes or no to the country's decision to that. It could impact the country's position or partnership for future efforts with other countries, but right now it does not look like they can, but again, it's TBD as well. And the IMF itself, along with, I believe, the G7, G8, are all in these types of conversations right now as to what digital currencies look like. And that's why that's such a huge topic right now, because if digital currencies take place over digital assets, which one will be that currency? Not just a store of value, but currency, something that you're buying, selling, and transacting with. And a lot of them, including the IMF, are trying to get ahead of this and hope that the digital currencies are creating, again, central bank digital currencies are the leader, and not necessarily something like Bitcoin or otherwise. Do you think the SEC resembles in the crypto markets? Okay, so yes, the SEC, from what I'm reading, just to be clear, in my opinion, does see, yes, the cryptocurrency markets as a Wild West. And again, as I mentioned, we're only 12 years into this industry. We kind of are in the Wild West. We just happen to have an exponentially compounded growth of this technology that's taking effect a lot faster than what we'd seen to other technologies take place in the past as well. And it's also more consumers, more people online, more transaction, again, trillions of dollars transacted as well. So in terms of minimum regulation around security overflows, I did a great talk on this yesterday with some experts in the space. Right now, all I can say is what I'm hoping for and what many are hoping for is that there are guidelines, those rails put into place. You know, what is considered a security? What is considered a digital asset? And if it's considered a security, how is it regulated differently than that of securities today, right? So if you receive tokens, governance tokens or utility tokens, are those securities such as a security of an early stage startup or a security of a publicly traded company? There's a lot of conversation around this. If you're earning interest or yield on your digital assets, or, you know, for instance, lending against your non-fungible token, an asset that you own, is that interest you own a security or is it generated as income? How do you report it? There's a lot of conversation around taxes in the implementation of that as well. The SEC is one of many having this conversation. The world is just looking a lot towards the SEC, the US, on how this shapes out, and also how it's shaping out in China, as well as the digital yuan comes on to online. What do I think of the idea of creating listed index funds, ETFs on cryptocurrencies under regulation regime? So there are some index funds, just to clarify, there are some index funds out there. Grayscale hosts a number, so does Bitwise and others. The true ETF that's going to get out there, that I think it's a great idea. It offers more exposure to potential clients, more exposure to the world out there of digital assets, a new asset class, if you will. So I think it's a good thing. Is it realistic? Yeah, ETFs are actually all over the place. 3IQ has listed, I think, 6, maybe 7 ETFs out of Canada and also into the MENA region. We're seeing ETFs in Brazil with the first one just being approved earlier this year, and Gemini heading up as a custodian, which is kind of what I would question to that question, is who's doing the custody of those assets, right? Where are those assets coming from? What is the percentage split? And again, who is holding those assets, and where's the liquidity around them furthermore? Is there any halt on venture capital going into Nigeria due to central banks' harsh policies on cryptocurrencies as of late? I'm not sure on specifically Nigeria. I'd say there's no halt. If anything, an accelerant on venture capital entering in this market, as I mentioned earlier. But in terms of Africa, I'm seeing venture capital going all over the place within the region. A lot more in fintech proper and helping to provide the infrastructure. And when we look at venture capital, as we mentioned earlier, it's not just cryptocurrency, and a lot of those companies or funds may be investing in equity as well, and those companies may be focused on, say, authentication or APIs to provide open data, for instance, or new exchanges as well. So I think I don't see or know of any halt. I think it's just going to get more aggressive. IDOs, seeing it a little bit as a trend right now. It's mostly around the currency, excuse me, the tokens themselves, which kind of goes back into ICOs. But Courtney, to your question, yes, I'm seeing IDOs. I don't know if it's a trend. I just know that we are seeing more token sales, whether it's governance or utility tokens of companies, and we're seeing more of those start to happen now or pending in the future. What are my thoughts on the Shiba swap? I don't have any thoughts on that right now. I think that that's an interesting area that many other out there are more versed. I'm not looking at that in particular, but yeah. So everybody, that's again the quick of what's happening. Again, I know it was a lot. Feel free to reach out to me everywhere on social media, whether that's Twitter, LinkedIn, or otherwise. I'd be happy to answer any further questions or point you in the directions of the resources presented today and others mentioned. Those that you saw will be available on topionetworks.com within the next 24 to 48 hours. All the companies mentioned or the funds can also be found with profiles on topionetworks.com as well. And again, do reach out on social media, follow me for more context on this industry on a daily basis, and of course on a quarterly basis here at Topio Networks. And much more as well. With that, everyone, have a wonderful, wonderful day. I thank you all again for participating. I know we went a little over, and I appreciate everyone that stayed afterwards as well. And thank you, Jean-Marc. Thank you again for all the kind words as well. And if anyone has any further questions, feel free to reach out. And thank you again to the team for all their help. And everyone have a wonderful day. Take care. Bye. Thank you, Joe.